Welcome to GP Bullhound Tech Thoughts. Today is the 30th of April, and we're here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, they will cover market updates and share their learnings from this week's big tech reports. Over to them.
Let's start with the market update. The market trending slightly upwards. Numbers coming out are, in general, to simplify it, very, very strong. But I would almost say that the skew has been negative. So even if you have a strong beat, the stock price could go down. But if you missed a little bit, you're down 7 to 15%. So I would say the skew has still been on the negative side, which is a little bit surprising given the fact that we're not just seeing strong results on Q1, we're also seeing, I would say, slightly better guidance for the full year than anticipated.
Yeah, and we had a lot of interesting reports this week, and we won't bore you with a lot of numbers. So we're thinking about clustering them together in three main findings. And I think the first one that was pretty expected was the strength of the online ad business. So we started with the report of Alphabet at the beginning of the week, where we could see that search growth revenue was 30% in the quarter year on year. But if you look at YouTube, it was even stronger, almost 50% growth. What do you say about them and the other ad-dependent companies?
Yes, it's been really strong and accelerating growth. But as you said, Johan, it was expected, but I would almost say anyway stronger than expected, even the guidance into Q2. And it's really travel and leisure coming back. Ecommerce has been on fire for a while, but travel and leisure really coming back strongly.
Yeah, and also Amazon that reported yesterday, we can't see the absolute numbers, but within other revenue, it's mainly ad revenue. And that growth was even 70%. And the rest of Amazon's report was also really good. So, and we can also lift up Facebook in the beginning of the week there with 42% growth for ads. So super strong reports there. And looking at the rest of the year for advertising, what do you think there, Inge?
I think we'll continue to see strength, absolutely. The only cloud, so to say, is EDFA from Apple, which is starting to be implemented, and the Google changes to tracking of cookies and so on. So there will be some volatility during the year, but I would say the trend is clearly positive, with one exception, which we already started to see in Pinterest and Twitter and a few others, that the engagement level has come down a little bit in the US as we go out of the lockdowns. And that will be a slight negative effect during the year because we will have less time on the phone and on computers as we need to go back to school and work.
So that's our second learning from this report, that people won't sit home the next quarters when they're vaccinated. So we could see that in Pinterest report that was pretty heavily, I think the share price was down around 10%. So what they said was that this quarter they have 98 million active users. But next quarter they're guiding for 96 million. And the company has underlying growth. So this really means that they are really careful about saying that people will use their service a lot. And we also had a Netflix report last week where guidance was super weak. And this week we also had Spotify. It's kind of a different story because Spotify, you can listen to music also when you travel or when you're commuting to work. But that guidance when it comes to active users, especially the free tier for the rest of the year, was pretty weak. And the share also went down almost 12% on that report.
Yeah, no, we're definitely getting more back to normal, but I would still say at a slower pace than we earlier anticipated, as especially the lockdowns outside US has been prolonged, Germany, Japan, and we still get really bad numbers from India and so on COVID. So it's been delayed a little bit, and that's also helping a little bit the demand for work from home. But it's turning more positive in general that we are getting vaccinated and so on, and that will have a short-term effect on subscriber numbers for many of these companies.
And our third point here is what we have talked a lot about, and what is talked a lot in the mainstream media as well, the chip shortage. But this quarter, it was a comment from Apple there that they will they expect to miss $3 to $4 billion in sale in Q2 due to the chip shortage. So now it's really starting to flow into the guidance of the big tech companies. To say about that, Inge?
Yeah, it's quite interesting. And just in the last 2-3 months, we've seen major upgrades on the capex and the demand for the second half. And I just want to state again, which we've been saying a few times here, as you said, Johan, that this is not a short-term fix. Because if you look at the equipment names KLA reported yesterday, they are sold out. So they can't deliver more than they can add more capacity, and that takes time. And just to put that in context, if you take ASML, for example, and the lenses in the EUV tools, it takes 13 months to produce one. So even if you, in all other things equal, if you had capacity and you order one today, you're talking Q2 2022. So bear this in mind, and also the fact that there are two cycles. The first one is the one driven by the economy, so demand-driven cycle, cars and so on, and that is very hard to predict, but it seems like the economies are turning positive. But the second part of it is much easier to predict, and that's the demand for the higher end nodes and the complex chips, and that is here to stay. That's going to continue for a long while. The cash on the balance sheet for all the big companies means that they're going to spend on R&D.
So it will be a shortage of the high-end segment, but also for the low-end segment. There, no one wants to build a factory to build a low-price car semiconductors, because there, if you add a lot of capacity there, you will have too much in a short period of time. So it will stay a shortage there as well. So we'll probably continue to see this in the reports. And for next week, we don't have so many of the really large tech companies reporting, but we have Activision on Tuesday, which will be really interesting. And we also have PayPal, Uber, and Bookings on Wednesday. Interesting to see there when it comes to travel from Booking.com. I think we should round off there. Do you have any last comments, Inge?
Remember also the Activision are already pre-announced, though, in line or better results. And I don't know if you saw yesterday, Uber and Lyft was down 6 to 11% on this changes on the labor laws in the US with the gig economy. So that will be a really interesting comments to see when the results coming out.
Looking forward to see. Thank you for this week.
Thank you very much.